Hello, hello, hello. How is everybody? I'm your boss, Joe Boss, and welcome to another weekly trade plan stream. Man, oh man, oh man. Was it an interesting day today? So many assets fell today. And a lot more assets rose. We can go ahead and check out the losers. Jets, financials, fintech, and the energy sector generally. Commodities, oil fell, soybeans fell, copper fell, cocoa fell. Copper's been falling for a good month here. And nat gas has fallen a tad. On the crypto side, only XRP is down on the day. Wow. Coinbase is up 5% today. Yeesh. And then on the individual equities section, it's financials and energy on that front. Man, oh man, oh man. And also on the global equities side of things, it looks like New Zealand, Russia, that is Brazil, right? And then this one is, I think I'm Middle Eastern, and COPSI. But overall, most equity indices are up on the day. You got the DAX. DAX is up, up, up. The Japanese are up, up, up. South Africa is up. NASDAQ is up. Man, just go ahead and click on any one of these things. S&P up. OS 200 up. Man, oh man. That's good. Good, good, good. What about TSX? Yeah, that's Canada. Canada's up. So equity indices across the board are up. So, why? Why are all these things up? And then we can also look at currencies here. Everything against the dollar is up. Everything against the yen is either chopping or weakening against the yen. And then, I mean, where's the dollar yen here? Dollar yen's done pretty good today. Towards the end of the day. This is a 1 hour chart, not a daily chart. Look at this. That bar is when NFP released. And dollar yen fell 100 pips. That might clue you into maybe what's going on here, right? So here's the dollar. Dollar fell in the hour that NFP got released, 40 points. If we go and check maybe the euro dollar yield spreads, right? Go here, go to a daily. Let's go back and forth real quick here. Wow. What's going on with the yield spreads? Uh-oh. Oh, hold on a second. The settings in my indicator look a little different. Yeah. Yeah, that is too weird. Yeah, look at these yield spreads are pretty damn negative today. Pretty damn negative at the moment. But I kind of want to check. Do between curve 2 and curve 3. Down. Yeah, not Still not looking too hot. That's pretty negative. That looks pretty damn negative. So nothing great there on the yield spread side of things short term, which is honestly kind of sad. Long-term yield spreads seem to be holding up, but man, this has got me thinking we're going to probably see a little rotation. But look, oh, hey, Ani. Nice to see you. Nice to see you, Ani. Very, very nice. But look, what happened with NFP is it came in below expectations significantly. Anybody who's come here from the video title knows that's the case. We were expecting 80,000 new jobs, and instead we had negative 23,000. And the prior NFP got revised down lower by 30,000 jobs. This is the worst NFP since 2020. I forget the exact month, but I know that the year is 2020. So this is the worst NFP in like 6 years. This is pretty bad. So why are all the equity markets up? Why are all these different harder commodities up? Why is everything rallying against the dollar? Well, it's the Fed. That's why. It's the Fed. When the Fed's mandate is for employment and inflation stability, well, we are on our way to having more stable inflation at the moment, so long energy prices don't continue to be so incredibly volatile or go to like 90, 100 or past that, which honestly doesn't seem too likely at the moment. Of course, anything can happen, right? Anything can happen. Maybe we are stuck at $80 oil for a while. We'll have to see what the different countries around the world are able to figure out as far as getting oil supplies out of the Middle East. So outside of the energy front, all these central banks, not just the FOMC, they're not necessarily seeing the inflationary effects that people were most concerned about from the Iran war actually following through at the moment. It still could happen in the future. I'm not going to be betting that we're going to see that next wave of inflation come, because either what has come is now what is. Like everything that's happened so far as the crazy stuff of oil prices, that's it. Like everything that happened here, right? Everything that happened here, that's it. There's now been about half a year since the attack on Iran, since all this crazy volatility and all the logistical and supply chain issues started coming through. Now there's a new suite of logistics and supply chain and insurance. There's essentially a new regime as to how people who are conducting business with oil are conducting their business, which is why I don't have those expectations for really crazy high inflation metrics out in the future. If anything, if we do get any sort of the next inflationary bout, I would expect it to be coming from some fiscal policy thing, depending on what country you're talking about, right? The UK kind of comes to mind in that respect. Now, oh, hello, Kari. Nice to see you in the chat, my man. Now, on the FOMC side, on the Federal Reserve side, that is why the focus on their reaction, the FOMC's and the Fed's reaction to this NFP, is why the markets are moving the way that they are. Trading is about getting exposure to a change in expectations. And in this situation, we got a tripling and a doubling down on a set of expectations pretty clearly set by the FOMC. When the FOMC sees employment fall like this and inflation is not rapidly rising or heavily appreciated, you're not seeing inflation rise significantly in the United States, but you're seeing employment fall. It actually puts the Federal Reserve, it puts expectations that members of the Federal Reserve will have even a more dovish expectation. Now, I don't think we're going to see outright people asking for rate cuts this year. We would need to see really significantly terrible employment data for the next couple of months to come out. I don't think that's actually happening. And we would need to see, or we'd need to see inflation like plummet like a total rock. We could see inflation fall maybe a bit more, but it's mostly an expectation of a hold with the dovish communication that comes out, let's say, over the next 2 months. So when some president from one of the Fed districts comes out and they say something along the lines that's a dovish call, then I would expect dollar to weaken on the announcement, because that's just more ammo for future dovishness. For, oh, okay, we're not going to be the probability of us hiking maybe in December this year goes lower on every single dovish piece of commentary that we get between the Federal Reserve meetings outside of their blackout periods. Any sort of rate cuts are coming in 2027, okay? We would need to see much lower inflation or a significant fall in employment that would justify rate cuts, and right now we do not have that. So right now it seems like we're just going to be staying on hold, and sometime in Q1 or Q2 of 2027, if we continue following along this path economically in the United States, we'll be seeing the first rate cut sometime along that time frame, right? Q1, Q2 next year. Kari says, I was thinking we should get some more dollar strength in the short term, then sell near 100.8 and hold. Probably not. I would like to see the dollar. We're going to be getting some Fed commentary next week, right? Someone from the Fed is going to be coming out and talking about these NFP numbers. And they are going to be coming out dovish. I would be watching like a hawk. And I am going to be watching like a hawk those next FOMC president speeches. Those next, Fed district president speeches for any sort of dovish tilt, because that will continue to reduce the hawkish pricing expectations. Maybe not explicitly give the markets enough to justify pricing and rate cuts this year, but enough to start more significantly discounting rate hike odds. That's more or less what I'm expecting. So I would not be on the side of, let's find a spot to get long the dollar from here. If anything, on top, one of the major reasons why we also had this fall here was the Bank of Japan intervention. Remember? We had this huge BOJ intervention, and we are likely going to see continued intervention from this point forward. And if you read a lot of people who do analysis on the BOJ, they are also explicitly going to stay hawkish. A lot of people thought it actually was a policy mistake from the BOJ to not hike in that last meeting. In fact, there's some speculation that the Treasury Secretary for the United States, Besant, was actually very mad that the Bank of Japan did not hike when they were doing this intervention. Because the intervention came, and if the hike came, this would have gone down even further. So Besant's not totally happy about that, but one thing that's nice about it as a good ramification is that because the BOJ didn't hike, ironically, it gives them more credibility because it means that the Ministry of Finance and the Takaishi cabinet, the government in Japan, are genuinely not doing some kind of like backroom dealing in pressuring the BOJ to cut or hike rates. It still happens. And there have been prior regimes where that is like explicitly the case. But the fact that there was no rate hike from the BOJ this last month really does mean that, well, if the Takaishi cabinet and Besant and the Ministry of Finance in Japan really were pulling the strings and pressuring the Bank of Japan to do specific policy, even if they were in a total agreement with it. This is actually a subtle way, a really, almost subtle way, right? Monetary policy is not always typically subtle, especially at rate decisions, right? But when they decide not to hike, when everyone in the world, their own government, their own finance minister, and the world's largest economy's treasury secretary wants them all to hike and they don't, kind of helps build credibility in the Bank of Japan's decisions with Udeya, like the BOJ governor Udeya. It's a very nice thing to think about. I can smoke the opium, right? Joe telling us whatever we need to know. Yeah. So no, like that's what I get out of what's going on, right? With the DXY. And we will likely now see, because remember, this was the big move here. These two bars were the big thing that caused us to go plummet lower, and this was the BOJ, not the BOJ, this is the Ministry of Finance of Japan and the U.S. Treasury intervening in the FX markets. We will likely see this happen again. Okay, this is going to happen again. Let's go ahead and look at the yield spreads real quick. Oh, yeah. We have to go to dollar yen. This is technically not an FX symbol. So, wow, look at that. That's actually... Oh, hold on, my kitty cat just opened the door. And I want to keep the door closed. Alrighty. So what do we got here? We got some positive short-term yield spreads. Yeah, yield spreads across the 30 to 7 year are very, very, very positive still. Which honestly isn't great. And I think these yield spreads would be a lot tighter if the BOJ actually did hike. But now with what happened in the United States with NFP, you can actually see it was still a red day. Oh, if I just real quick, you can still see it was very clearly still a red day. But how red? Well, not significantly. They'll probably be, I would expect, based off the current position of the yield spreads and the number of people still doing carry trades and trying to unwind those carry trades, and the amount of people trying to reinvest into Japan, buying yen, actually, there's going to probably one more push, and I don't think that push is going to go very high at the moment. It really does seem like Japan is actually going to be getting a new regime, genuinely a new regime. Wow, but look at this. Seasonally for the month, using probability pivots, it seems like, see, there's our probability weighted pivot low. This little orange dotted line here in the center of the screen, that actually is an indicator, a part of this pivot point indicator that takes these probabilities and these pivot point levels, and it compresses all the data, compresses the probabilities, the probability weights, and the price levels of the pivots. So the probability weighted pivot takes all the information from the indicator and puts it into a single line. And this is the low for the month, which happened on the very first bar. And this is where we're at. The probability weight, the low for the month is currently at the probability weighted pivot low. So it's definitely possible to go lower in this regime. But now looking at this, I want to be cautious on if we're going to be making a new low. I think maybe we'll end up doing something more or less range bound. Let's look at the high odds real quick. Yeah. We could say it's like, what's the 50% retracement or something on this? The central pivot. This would be the 66% retracement, so maybe sub 60, maybe 60, sub 61. Something along those lines. If we wanted to use range probabilities, this is what we'd be getting, which is essentially saying the high and the low are probably in already for the month, and we could just end up being more or less range bound. Now there is this red arrow pointing down into the left, and this is coming from the 1 week chart. And to do timing dots. So if we expand this a bit to maybe 1%, so plus or minus 1% of this high for the quarter when we project out trying to find the bottom for the quarter, given this top for the quarter. We are currently in Q3 of the year. So this is the top for Q3, and the top is somewhere in this red box right here. Then following sequential bottoms for the quarter have occurred around this area here. So for the quarter, I want to stay bearish. Does that mean maybe we could see 1, 2, maybe even 3 weeks of pullback to even above 160? Oh, hell yeah. You know, people will do all sorts of stuff with technical analysis. You know, I don't know, where's the box drawing? Yeah, I always hate that they added that new thing where, yeah, something like that. So you could probably go up and then down, right? Like, that's not unreasonable, honestly. It really is not, to set that as an expectation, in my view, looking at this data. So my expectation is still lower. My expectation is still for a weaker dollar. On the equity side of things, I'm still quite bullish. We'll hit 8K very, very easily on the S&P. This is going to be so incredibly straightforward here. For the month, Here is the low for the month on the timing dots, and here's where most of our dots end up, where our top usually comes in for the month, given our low is right here for the month. So probably just up into the right, like so. Probably not a super crazy point, but maybe just volatile. Hopefully the volatility starts going down and we just start seeing positive drift come in. Nice and easy trend trading. Nice and easy trend trading. Oh, hold on. That's July. We need August. There we go. And a timestamp. How about that? 1427. Now let's do NQ. So this was our trade plan for last month on NQ, which was either this thing's going to bounce up and close up here, or we're going to move down lower and then close up. And we pretty much got this second trade plan, but I like being more precise with my expectations. And when I use these drawings to express my expectations visually on the screen, I like to be right where these arrows are placed in time and in price. And well, you could see the low is right here, and the low for what I expected was right here, so it was clearly off. And also the low was occurred here on this bar, and we were 1, 2, 3, 4 bars off. You're not going to be able to set expectations perfectly every single time when you are trading, but what's important when I like to trade and when I'm setting expectations is that I know what I expected prior to receiving some new information, or simply as time passes. So then when I do receive new information and price develops, I can then take that in to update and create new future expectations of what to set. And right now, NQ is in the same scenario. Like, it's very, very straightforward. So hopefully nothing crazy, just some volatile chop going sideways here. Nothing crazy, hopefully. And if we go to, I don't know, like a 6-hour chart, we can look at the week ahead. Yeah, probably 3,200 next week and 29.6. That'd be great. Just to tap 29.6 and then rip to 30.2. That would be nice to do something along these lines here. Red. And then green. And then we'll go ahead and just copy the text from over here. All right, are there any assets you guys want me to check out or talk about? Maybe any political happenings? Again, if you want updates, go ahead and hop into the Trade Research Discord. Link to that's in the description. You got to join through WAP. That helps us keep the bots out by having you guys create WAP accounts. And it also lets you sign up to get the free 2-week trial to the trading group and indicators, all the indicators that you're seeing here on the stream. The yield spread, FX yield spreads indicator, the range probabilities that you're looking at right now, the probability pivots, and actually a few more things. Like the seasonal forecasts indicator here. Takes a little bit of time to load, but it's $100 a month. You can try it out for 2 weeks for free, and you get access to the Trade Research Discord, Plan the Profit, which has the research forum where we're following all sorts of political events. There were some things around the Strait of Hormuz that have been developing, some things with the Russia-Ukraine war. Been following the there is the the candidates for the Michigan election in the United States finally were selected. Man, oh man, oh man. The Republicans couldn't have had a better opponent. I would be surprised if the Republicans lost that race. Let's see here. Red Sea crisis with the Houthis, the German state elections. That's right, there's a lot of elections coming up around the corner here. And we have the Outlooks channel. One of the things we can start to do is actually pull up something like this. This is Australia and New Zealand Weekly. It's a weekly outlook published by Westpac. This is one of the largest banks, one of the big 4 or big 5 banks in Australia. And they also cover New Zealand, right? Australia, New Zealand. And you can learn all sorts of stuff that's going on here. This woman, Lucy Ellis, is essentially the person in charge of the analysis over there at Westpac. She's their chief economist. She replaced a guy named Bill Evans, who essentially worked at Westpac for like 30, almost 40 years. And she actually was a deputy governor for the Reserve Bank of Australia. See, when you start to read outlooks, it's kind of important that you know whose opinion you're reading. So then you can actually understand, oh, this is why this person's commentary is actually important or not. Not just that, oh, there's some chief economist or some guy who's the head of research at some bank for some group or whatever. But that they have all, frankly, sometimes some significant government experience. So obviously Lucy has been doing these weekly. You can read what she has to say every single week. She writes every single week. And look, this is her take right here. The RBA will not take fright. This is all the way covering all of her expectations on the RBA. And you can just read that on your own. Or you can join the trade group. We talk about these things, right? We go over this stuff, and all this stuff is free and publicly available. And all you need to do is know where to look for it, where to find it. And we have a lot of banks cataloged, a lot of the locations for where to get access to this research cataloged in the Discord server. All you have to do is hop in, and we have, including myself, I'm probably the most active person, of course, on the Discord. But I read through all these things. I've been reading these things for years. And if you'd like to get into reading these and talking about these outlooks and expectations of all these different institutions and different trades, and it's not just FX, right? It's also bonds and equities and commodities and crypto and whatever else. I've been starting to learn quite a bit about municipal bonds. And of course, there's the world of corporate credit. So there's all sorts of reports that we get, because a lot of those reports are free, and all you have to do is know where to look for them and be able to talk with somebody who, can read them and maybe teach you how to read them too. Alrighty, you guys. I am very, very happy with how the stream has gone so far. This is one of the indicators I've been looking at, another indicator I've been looking at. I try to stay, because I develop indicators on TradingView in PineScript, I like to stay up to date with what other people are releasing. So then I can go and see, oh, maybe they're using some new programming technique. Oh, maybe they're using a cool new indicator idea. And some of these guys I talk to, and, it's also about giving mutual support for other guys who are in the game. So, man, I am very, very happy so far with how things have been going. We can also check out Eurodollar real quick. We'll add that to our little bit of analysis here. So we did S&P, we did NASDAQ. Now we will do this pair here. Probability pivots. Looks like it's probably topped out for the month. If we do go higher, the volatility is going to pop. If we go past 116, the volatility is going to pop again. And probably will have greater volatility than these two bars here. So I would watch out and start reviewing things. So we could actually use the seasonal forecasts indicator here. And look at that. Real quick. I'm actually going to reset the indicator settings here. Because I don't know why, but the indicators look a little off. Yes, it looks like TradingView may be doing something with the table visualization. And yeah, they're changing something with the table visualization code. Because these are bugs. The bug that I had earlier in the stream with the FX spread indicator, the table in that indicator, now the table in this indicator. These are visual bugs I haven't seen before, and the code hasn't changed for these indicators in months, and this is a new visual bug that I'm seeing. So this is definitely something on the back end on TradingView's side. But let's go ahead and interpret what this indicator is telling us. So I'm going to first make this a bit smaller so you can see the juicy part of the indicator, which is this right above my head. This actually is what I call the ghost bars. So this actually shows you what the bars are doing seasonally going forward. And this table gives you the raw data. It says, hey, here's how frequently the bar was bearish. Here's how frequently the bar was bullish. When the bar was bullish, here's the expected return, the median return. And when the bar was bearish, here's the expected return. Now, the most bearish trading day coming up seasonally, 70% of the time it's a red trading day. And it's got a pretty menial, a pretty clearly negative expected value is actually the first trading day of next week. And then the Friday of next week. Both of those trading days are bearish trading days 70% of the time for euro dollar. So, I said, hey, I probably don't want to necessarily be bearish dollar right now in this regime. Looking at this data, I'm like, well, I probably want to make sure I look at the information that's coming down the squawk and how the next set of economic indicators prints. Because if the data lines up with these seasonal expectations, I might not want to get short the dollar maybe until almost 2 weeks from now. Till about the 3rd or the 4th week of August. I might want to wait. Isn't that kind of interesting? And you can even see the positive seasonal expectations start to pick up, but it seems pretty choppy around here, right? Seems pretty choppy. Honestly, kind of not the end of the world, though. And as the bars move forward, as time moves forward, we can see more bars, or we can actually go into this indicator and force it to display the data for September if we really wanted to know what the seasonality for September or October, or any month or any period is like. So that's very, very nice. So let's go ahead and look at our bearish expectations. How low can you go? And let's also throw up the timing dots. Set this to something more reasonable. Whoa. There are a lot more dots to the upside. Whoa. So if this is in fact the low for the month, if that is actually the bottom for the month. That's a pretty clear, dense cluster of dots for where the top comes in. That's pointing to the 118 handle. That's like 300 pips. That's huge. That is massive. I personally don't think we'll get 300 pips, but I also did say, hey, if we do move higher, right, when we were looking at the high odds here for probability pivots, the reason I was saying, hey, if we do go higher, the volatility is going to pop, is because if you do not get your top between R1.5 and R0.5 this month, which is where 58% of tops for the month seasonally come in for the month of August, then your top comes in somewhere above R1.5. So the next most likely zone is this area between R2 and R2.5. But I think this is where the timing dots can be explicitly helpful. Because you can actually see we have some samples here for probability pivots. And then we have non-seasonal data here with the timing dots pointing up, up, and away. And if we throw on the ranges real quick, oh, check that out. The ranges, the probability ranges, which are using non-seasonal data, point out, hey, you have kind of a fat tail here and a bump like that. So there's an increase in the probability when you have increased volatility of finding your top for the month somewhere in this area here, around 118. So that's something I want to keep my eye on, are any catalysts that could increase the volatility in Eurodollar over, honestly, the next week. So if you are in the Discord, you can join in with us when we go over economic events for the week ahead for the Euro area. And also, just so you know, there are elections coming up in September. And the AFD is expected to win those elections in September. And a good question to ask is, what is the expected move if the AFD wins those state elections in September? How is the Eurodollar expected to move? Well, that's a really important question to ask. And we've been reading analysis for the last 2 months, precisely from people who write outlooks like Ellis that we saw from Westpac. We find those reports. And there's already been many reports from many banks and many institutions talking about what their expectations are for when the state elections in Germany during the last, the third week of September. This week, right around here, second and third week of September, are done. How will Eurodollar move? Another thing to entice you to get into that damn Discord. Oh, man. Okay, let's go ahead and timestamp this guy here. We can go ahead and put 46 there. I'm just going to leave that as the baseline expectation for now. I do not have a rationale for why we would see this type of volatility at the moment. But right now, I would also probably want to set an alert at like 116.5, because once you start crossing that spot, you get into this probability gap. It's just where the probability distribution of where tops for the month start to sink. And so the probability of you finding your top for the month start to decrease in this area right here. And then it picks up in this area over here. The density, the probability density picks up here, and it's high over here. And between those two peaks, there's a trough where the odds are decreased. So I just, instead of saying, oh, there's two peaks with a trough and da-da-da-da-da, I just say the gap. It's the probability gap. Not that there's no probability there, but that the probability, it's a trough. It's a probability trough between two peaks. And if you do get this extra volatility, I really would not be surprised to see this sort of outcome. But now it's a matter of, okay, that's a risk. What should I be looking at in the markets? What should I be looking at in fiscal policy, as far as monetary policy between the United States, Europe, the geopolitical events of Iran? Like, these are a lot of things to follow. Don't get me wrong. But this is why it is useful to be with a group. And again, the Trade Research Discord is free. The trading group itself is not. But you can participate in the trade research for free and do it for like 4 hours a week. Just come into the Discord, hang out, check out the forums, maybe just ask in the general chat, like, hey, what's cool, what's kind of the important things going on. And then also tuning into the streams, honestly, are good enough. Tuning into the streams and asking questions are usually good enough. And for a lot of people, not for everybody, not for people who are like trying to really focus on making sure that they're doing a good job staying on top of expectations. Yeah. All right. I am done with my analysis. I said, maybe we'll go over crypto and a few other things, but honestly, crypto hasn't done a whole heck of a lot. So I am good to go. So I am going to thank you all for watching. Thank you, Ani, Kari, and H2O for hopping into the chat, saying hi, keeping me company. And for everyone else watching the recording, I will see you guys in a bit. All right. See you on the Discord. See you in the next stream.